Welcome. Welcome to forpay.org. This is Consumers Dr. Bengala. Thank you for joining us. Today's topic is financing the health insurance. How do we finance the health insurance? There are multiple options, folks. Recognizing that health insurance can be financed through at least 3 mechanisms. Let's look into it one by one. Number 1, insurance premiums. Insurance premiums. And number 2, savings. Taxable and non-taxable health savings accounts and health reimbursement accounts like HSAs and HRAs. And number 3, incentives and rewards. This is where we can lower the costs of the healthcare. I'll elaborate further. Obamacare mainly focused on premiums to finance the health insurance. Premiums, only premiums. Whereas what I'm saying under the consumer-driven, personalized health insurance, it recognizes that if unleashed from all the Obamacare restrictions, the private market will develop products and services with premiums, savings, and incentives. Yes, savings and incentives. These innovations would provide consumers with lower cost financing options that meet consumers' needs. Yes, consumers' needs. Personalized health insurance expands the ability for insurers to offer multiple plan designs that provide financial incentives to plan members who are compliant with healthy initiatives. Healthy initiatives. Federal law should be changed to allow taxable advantage health savings accounts on any plan design. Yes. Such account-based plans put control in the hands of the consumers. Account-based plans support financial rewards and incentives for specific healthy behavioral changes. This is what is lacking in today's healthcare industry. There are no rewards for the consumers to be healthy. And this focuses on personal rewards. Consumers willing to make good health and healthcare choices should be able to share in the savings generated. This is what forpay, what I'm talking about is the more savings, the more it pays back to you as a result of your savings. Rewards and incentives in the individual and the group plans can be used to offset any deductibles and co-insurance. See, we have deductibles and co-insurance in this present day managed care, so that can be avoided. Outdated state rebate laws prevent insurers from providing incentives to the small employers. Yes, smaller employers. and fully insured groups that are allowed large employer self-insured. It is allowed in the large self-insured plans, but not in the smaller employer groups. It's not allowed. Incentives and rewards are proven to lower the cost and improve health and reduce unneeded use of medical care. Unneeded use of medical care and improve quality. Consumers will think twice before they have the surgery because it involves using the funds from their savings accounts. So they will think twice before they go and have a procedure done, which is lacking in today's health insurance programs. Incentives and rewards to lower the costs and improve health and reduce unnecessary surgeries. Incentives can be offered for wellness, condition management, disease management, and health improvement programs, folks. Health improvement programs. Incentives can include merchandise, gifts, cards, debit cards, premium discounts, health savings accounts contributions like HSA contributions, co-payment reductions, deductible reductions, co-insurance reductions, and lower employee contribution. These are all incentives, folks, which is lacking today. If consumers were given these incentives, they will definitely look towards lowering the costs of the healthcare. Right now, there are no incentives whatsoever for a consumer. Personal incentives. What are the personal incentives and rewards? Can lower the cost of insurance by 20%, folks. 20%, even more. ERISA, under the federal large employer groups, allows individual incentives based on health status for self-funded groups. These are for the larger employer groups only. Federal Department of Labor allows incentives up to 20 to 30% of premiums for health status and unlimited incentives for participation rewards under the ERISA law for the larger employer groups. But it's not there in the smaller employer groups, folks. These are potential personal savings that would be in addition to potential of group pool utilization savings, as I mentioned earlier. Group pool utilization. Larger employer groups have successfully adopted many of these incentives. However, Obamacare's single risk pool mandate and existing state laws for individual health policies and smaller group plans discourages implementation of these effective cost-saving programs. I want to reemphasize that. Single risk pool mandate, focusing only on the premiums, not on any incentives. As it stands, the existing state laws on individual health policies discourages implementation of these effective cost-saving programs. Wrapping it up, folks, that health insurance can be financed, as I mentioned earlier, through these three different mechanisms. To wrap it up, there are three mechanisms. One is insurance premiums. The other one is savings. Number two is savings, taxable and non-taxable, HSAs and HRAs. And number three incentives, and rewards. Thank you for joining us. We will see you in the next episode. I'll be talking about Medicare. Why is Medicare putting your funds, Medicare healthcare funds, into the insurer's pockets or managed care organization? Why is it the consumers have no role in the Medicare, so-called Medicare Advantage programs? I will go into detail regarding the Medicare Advantage and the drawbacks of the Medicare Advantage. Again, if you like this channel, subscribe, share, and make some comment, folks. We will see you next time. Goodbye, God bless, and salute.